What up, guys? My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. So, today I thought I would show you a way to identify when you can get into bullish momentum, similar to the last video that I made, the #1 Bitcoin trading strategy that makes you over 600% using it on the 5 minute. But today I want to focus on safety, and I want to focus on the daily, and I want to show you a couple identifying things that will let you know when it's safe to buy and you're going in the right direction, assuming you want to go up, but I'll also show you how you can go down. Now, a lot of people want to buy the dip. Um, you know, I understand that when you get in a certain zone and you're really low, like for instance, we're looking at Bitcoin, and Bitcoin is one of those particular particular cryptos that, for me, I want to just always accumulate. And I feel like right around 20,000, even if it goes lower, I still want to buy. So, I get that. I feel that way about Tesla and Ethereum and some other ones. However, to identify that you are going to be trending up, what you need to do is, there's a lot of ways to do it. I'm just going to show you a simple way. Is you need to have the price action, which is this little blue line, and it needs to go up through the 9 EMA, okay, and the 18 EMA, and the 9 needs to go above the 18. It needs to cross, kind of like it does right here, okay? So it crossed right there. So if you would have bought here at 41,035, you would have sold over here at basically a $600 gain, okay? Now, that does not mean that you are identifying that you're going into a bull run, okay? That's identifying that you are safe to enter in a long direction, okay? Because when it crosses through the 9, the 9 goes through the 18, it gives you confirmation of safety. It's not the earliest you can get in, okay, but it's much safer, okay? Now, I put the 200 on here. As you guys know that watch this channel, I'm huge on the 200. It does not matter what time frame, the 200 is very important. You will never officially be in a bull run coming out of phase 4 until you are, price action is above the 200, your ribbons are blue, you're above all the EMAs, the 200, the 100, the 50, the 30, the 20, the 9, and at some point we'll talk about the 5. On my other chart, how, I always show you guys the clouds. The clouds, just so you know, on my regular charting, it's actually a 5 to 9 cross. And the reason I use a 5 to 9 cross is because it's ultra tight, and it's kind of like the swing trader's dream method. The 5 to 9 is so sick if you want to be a swing trader. It's really all you need. And I have it indicated in the clouds. But today we're going to talk a little bit about the 9 and the 18 and how to identify when to go up. Now, if you go watch the last video I made, #1 Bitcoin strategy, I showed you how you could make a ton of money, an absolute fortune, if you just trade the crosses. Don't worry about the news. Don't worry about all the YouTubers. Don't worry about all the TikTokers. Don't worry about Bloomberg. Don't worry about all of it. It's all going to show up in the charts, okay? The news will show up in the charts. And, let's just take a little look here. If you would have traded the crosses on Bitcoin, you essentially would have, not only would have you gotten out right here, but you could have trusted that the green 9 went through the 18, and as long as they don't cross, you just hold until right there, okay? Now, they crossed right here. So let me just grab a calculator and just show you with some patience, no matter how much it wiggles on the daily candles, the hourly, the 4-hour, all that, you essentially sold at 39,912. That's when you got out of your short, and you had started your short at 63,876. Okay, you made $23,964 by just knowing that the green one went through the pink You bought it, and as long as it doesn't matter if it touches it, doesn't matter if it goes above it, it only matters if the green, see right there, almost did, but it only matters when the green goes through the pink, okay? Now, this is for all you guys that want to buy the dip, okay? Let me explain something. If you don't sell, let's say you don't sell Bitcoin up here, and you're like, ooh, it went down, I'm gonna buy more, okay? $1,000. And let's just go to a weekly, okay? $1,000, all right? So, and let me put on a different thing so I can actually identify. Okay, each one of these candles will be 1 week, okay? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, did not cross, 22, 3, 4, 5, 6, 7, 8, 9, 31, 2, 3, 4, 5, 6, 7, 8, 9, 40, 41, 42, 43 weeks. Let's say you were putting $1,000 in Bitcoin every week on Monday, dollar cost averaging, that's $43,000. Now, every time that you add that $1,000, you get more Bitcoin, but you also are taking bigger losses because you have more coin, more token, and you're creating more pressure to the downside. So wouldn't it make sense to just wait for this to cross and put the whole $43,000 in the bottom, and then you really average down just one time? Food for thought. Okay, now let's look at what we're looking at on Bitcoin. Now it's low. Its recent low was about 17,600, right? Okay. I had mentioned in a video, I think it could double bottom there. We'll see. You know, we never really know. We are pretty far from the 200, but you know, it can go farther. Like, look how far this is, right? Usually when it gets too far down, it'll come up a little closer. It doesn't like to get too far from the 200. It's pretty low right now. But these have not crossed. So it's not a good time to just keep buying the dip. It is a good time to start thinking, hey, I'm in the zone. Bitcoin's low. It's down a couple 100%. Like, I should accumulate. This is probably a good time to just start thinking about it. And, you know, I've been doing it myself. So there are certain ones that I will DCA into, but I do know that the safety point to buy in is when price action comes up and it goes through the 9 and 18 and the 9 and 18 cross, okay? And then it's really bullish when it gets above the 200 and you come out of phase 4 into phase 1. So if you're not familiar with the phases, what that is there's 4 market phases, okay? Let me get this chart to work. There's 4 market phases, okay? There's phase 1, which is when it first comes above the 200, okay? And you're bullish. See how your green is here above the 18, you're above the 200, and your price action is above. You have now come out of the end of phase 4, which is the bear run, and you have started phase 1. That's called the accumulation phase, okay? That's where smart money buys. Okay, and by this time when smart money is buying, usually all of retail is gone. They're either wiped out, they're working 2 jobs, they're scared of the stock market, they've already lost a lot, but smart money is still in, okay? And they're looking for price action to go above the 200, and you can use this cross to identify when you're trending in the right direction, and especially when you're above the 200, you're looking good on these crosses, okay? Now, phase 2 is called the participation phase. That's when retail and the economy gets a little bit better, people have a little money in their pocket, things are going a little bit better, and they're like, hey, let's get in. And that's usually over here. So smart money is getting in over here, okay? This is so this is the primary trend, this is the secondary trend. And then usually the participation phase, phase 2, where retail gets in is around here, okay? Then you have phase 3. Now, phase 3 is called the distribution phase, okay? It's where, you know, it rallies up. It's kind of where all the FOMO takes place. The late bloomers, they buy in late, goes down, makes a higher high. Everything's looking good. kind of starting to get shaky, doesn't make a higher high, really pushes for the fight, and then boom, falls. And that pretty much happens all the time. It usually has one last push, and then it tanks. And then when it goes below the 200, this is phase 4, it's the bear phase. And then what you're looking for is the cross below the 200, and then when it gets above the 200, you're kind of back to phase 1. So currently on Bitcoin, you're still in phase 4, okay? You're in the bear phase, okay? You're still trending down. You're under the 200, and you don't have the crosses. Now, we had a little cross here, but there wasn't a lot of space in between it, okay? So if you want to buy Bitcoin or Ethereum or Chainlink or Cardano, whatever it is, put a 9 and an 18 on your chart, and you can choose the time frame. But if you're on a lower time frame, you're kind of trading. This is more for investing and getting a really good price with safety involved. So throw a 9 and 18 on your chart, and a 200 is not a bad idea. And wait for the price action to go up. Yes, you're not going to buy the exact bottom. It's okay. Because a lot of times when you try to buy the bottom, it goes lower. Or you try to buy the bottom, it goes lower. So what you want to do is you want this thing to come down, the 200, this to go up and cross and then meet. And when they meet and it crosses over the 200, you've entered a bull run for that asset. Okay? Let's just take a look at a few different things and see what's going on out there and if it's time to buy more or wait for a little bit more of a confirmation. So I'm into this one, DRV. DRV is getting its cross on the daily, price action's above, and it's heading towards the 200. Now, what I like about this particular stock is this bets that real estate is going to go down. It's only at 42 bucks right now, and just right here alone was about 700 bucks, okay? I mean, we're talking about a huge gain if real estate comes down. Do you think real estate's going to come down over the next 18 months or so? I do. So I accumulated. I'm getting in right as it's crossing, okay? 8coin, prices are good. Don't get me wrong. Price action's going up to the 9, but it hasn't crossed through. It is closer to the 200. You just want to wait for the confirmation, and if you end up doing that, you can ride these stocks and cryptos to huge profits, okay? And you don't have to worry about all the news and Jerome Powell and inflation data, and you don't have to worry about all this stuff. Okay, let's move on to some stocks here. So let's look at NEO. Now, I think that NEO is, at the point where it's going to start to run up because of the delisting fears are going away. Things are, China and the U.S. are talking on a regulatory standpoint, and it's time. It's time for a NEO hit. So it had a nice little run here. If you notice, there's the cross. Okay, let's just look if you were trading the crosses on NEO. Okay, so it crossed right here. Okay, and that was at $15. Where is it? $15.91. Okay, and it told you to basically get out right here. Okay, so you did, and you got out at 21.08. Is that right? Yeah. Okay, you made $5.17 a share. You have 1,000 shares. You made $5,170. You have 10,000 shares. You made $51,700. You get the idea. And all you did was wait for the cross and sell the cross. Now, believe me, when it gets above the 200, that smart money is going to come in because they know it's phase 1, and you don't want to come in at phase 2 in the participation phase, because you're scared. You want to be ready to jump in. The trick to the markets are to ride the money, to follow the money, and understand how smart money thinks. Smart money is trained a certain way, okay? And, being above this 200, and you're, above even the 50 EMA and things like that are going to be a really big deal, and you're going to start to see that volume, that accumulation coming in. But look, NEO has not crossed. It has not crossed. It says, just give it a little bit more time, and you should. And remember, price doesn't necessarily matter. What matters is that you're not losing money, that you are getting in when it's safe, it's confirmed, and you're in the right direction. Okay, now it's close. It's close to crossing NEO. That's probably more bullish than a lot of charts I'm going to show you. I do think that NEO is a good company. I've been following it for years, and I think that NEO is getting real close. And a lot of the things that people were worried about NEO are subsiding. So, it's in the watch list. Now, Johnson & Johnson has a good dividend, been around forever. They're not going bankrupt. I like that safety. But look, it crossed here, and if you were to, get out right there or short it, then you basically would have got out at 175, and you're at 164. You've made $9 on every share, and you're not getting back in until these two cross and the 9 goes above. Okay, you're below the 200 too. You're officially like in a bear run, downtrending below the 9. So yeah, that's Johnson & Johnson. BABA, this thing is a perfect example of the 4 phases. This is an ideal example for me to explain the 4 phases. So here you go. I know it looks small, but it's actually just like this. This is more current, but a long time ago, this was a big mountain too. So there's the distribution phase, phase 3. There's phase 4. It crossed. It went above the 200, and now you're trading your crosses into phase. There's phase 1. Here's phase 2, distribution phase. Phase 4, bear. Back to phase 1, phase 2, phase 3, phase 4, which you're still in. These prices are outstanding on BABA. BABA's like NEO. It's probably going to get some love. Look, it's about to cross. It's about to cross. It is huge if this crosses right here, and it's about to. So BABA should maybe go on your watch list. It's looking pretty close. McDonald's does good in recessions. I remember in the last recessions, Walmart and McDonald's were 2 of the biggest players that just kept going. Why? Because people don't have a lot of money. People get laid off. People get food stamps. People go to McDonald's because it's cheap. It was cheaper then than it is now. Now it's like twice as expensive as it was 3 years ago. But Walmart is a big place to shop, and you get discount prices, right? So this is about to cross the wrong way on McDonald's, actually. And it's looking like it's ready to kind of go short, to be honest, for the moment. CCJ, this is it's in the right sector right now. This is energy. So you do have the crosses, price actions above. You're above the 200, looking good. Monster, okay. This is the green is below the pink. You shouldn't be entering. You shouldn't be, buying the dip yet. You need to see if it's going to bounce off this 200 and recross, or if it's going to fall. Okay. Let's just, just click through some, and then I'm going to show you some swing trading tactics. So this is Pfizer. And just as an example, if you were above the 200 and you crossed right there, okay, which was 41.50, so you bought there, and you have the safety, you have the confirmation, and you just wait for it to cross. You let it do its thing, and it crosses right there, and you essentially just get out, and you subtract the 41.50 from the 55.07, and you made $13.57 a share. So every 100 shares, you made $1,357, right? So, pretty simple, pretty good way. You don't want to just, ooh, it's lower, I'm buying. Ooh, it's lower, I'm buying. Ooh, it's lower, I'm buying. No, that can go on for a long time. Wait for the confirmation, wait for the crosses. You'll be in better shape. And if you just keep doing that on every one of your cryptos and every one of your stocks, not only is it easy to do, but you will get out with your money, and you will get in going in the right direction, instead of, throwing good money after bad and watching the compound get heavier and heavier with your amount of shares or amount of crypto to come down. You'll actually be able to hold on to all that money, wait for the cross, and put it all in there, and then really average down if that's what you're trying to do. Okay. ChargePoint was on fire the other day. After Jerome Powell, I got rocked again. But look, it's going sideways. They're touching, so we're going to find a direction. It's either going to come down or it's going to go up. It should be in the watch list. It should, have that one close, because, they are going to cross. Tesla's another one for me, like Bitcoin and Ethereum. I don't really care so much on the price. I just want to have a lot of it. But yeah, it's still okay. The green is above the pink, even though price action's below it, and you are above the 200. But look at that, volume's dropping off, and we'll just have to wait. Now, I took a look myself, and I think the low, well, it showed me $224, but I'm showing here at 209. So, you know, I mean, if it goes down there, we have to swoop, guys. We have to swoop. You're going to get very, very wealthy by understanding how to identify coming out of phase 4 into phase 1. Use these crosses to your advantage. Double down and scale in above the 200, and then just wait. Just wait. Let the time go by, and you will make so much money coming out of a recession. This is going to take a while. This is going to take a while. We're just starting to get to the real estate dump. The bankruptcies, the foreclosures haven't even really started. It's going to take time. So you want to be just working hard, making money, getting it over to the brokerage, knowing what you want, and getting ready, to buy these crosses, and, just keep an eye on what it is you want. Boeing, I'm over Boeing myself because all this is just crazy. But, look, Boeing, it's showing, that it's still bullish, but it's getting close to crossing to the negative. Disney, same thing. Disney is still bullish, has not crossed. Okay, sometimes they get close, but it has not crossed. And, we just want to see where it goes. Horrible volume. My indicators show it's coming down. Goldman Sachs actually has held up pretty decent, this being its high and this being its low, which was a double bottom. It is above the 200. Still, green is above pink, hasn't crossed. You're going to have to wait and see if it gets really tight and pinches if you want Goldman Sachs. And then if it bounces and that green one jumps up, that's pretty much going to be the low. You're going to get it. If this green comes down through the pink, this thing could come all the way back down, and then you get a better price, okay? Sam, Boston Beer, this thing is down like a ton of money, okay? And, in recessions, people buy cigarettes, they buy beer, and, Philip Morris, that has a really good dividend yield. What do they call it? Consumer staples, Coca-Cola, things like that, But look at this. This just got the green below the pink. Price action is diving. And it looks like it's still going to go lower. It's at 347, but it was as low as 289. So don't buy the dip going down. Wait for the confirmation of the crosses. Just wait for this green one, okay, to go back up through the pink like it did here. Okay? Check this out. If you were doing what I'm saying right now, not only would have you got out right here, but you could have gone short. And that was at $1,213 per share. It's expensive. Now, you're just waiting for them to cross. They haven't crossed. We still haven't crossed. Right here they're touching, but they haven't crossed, and they cross right there. Okay. Just want to show you how much money you could have made. So minus $488, you would have made $725 a share by just trading the cross and only getting out of it when the green one crossed back through the pink on the daily. $725 a share, guys. That's just sick. This is how you get paid, okay? And then it's okay to scale in going up when you get above that 200, okay? Now, let's just look at a few more. Airbnb, let's take a look. This is one that I want. It's very low right now, but it could go lower. It still is above the green, but it looks like it might come down. I just think most of the stocks are going to double bottom to where they were in mid-June, which I'm ready. I just keep sending over money, and I'm just ready to buy. But I'm going to wait until all my stuff shows that we are rounding, whether it's on the HMA going blue on the daily with the ribbon, or the 9 to 18 cross, which is similar to the HMA. And yeah, man, I'm just gonna load the boat. I'm gonna load the boat, and I'm just gonna wait, and I'm just gonna buy in the recession. I'm gonna get rich later. I'm not even gonna trip. It's fine. Home Depot, it's a great stock, has good yield. on the dividend, but look, it's about to cross to go short. It's saying go short. And let's just say that you wanted to look at what it looks like when you could go short on Home Depot. So you had 397.28, okay? And it did not cross until right here. Oh no, it didn't show a black line, sorry. It kept going down, it crossed right there. Jesus, sick. Okay, 297, oh, it's exactly $100. One trade, $100 per share. You had 100 shares. You made 10 grand on one trade. Just trusting the crosses, okay? Because just like it's safe when the 9 goes through the 18, it's safe to get in to go long. It's also safe to get in to go short when the 9 crosses down through the 18, okay? And really safe when it's above the purple one, the 200. So I just want to show you that. Now, you can look at all of them. You can look at Apple. Apple is, but look at this. If you would have traded the cross on Apple, okay, recently, you would have bought in right here at 139, and you're actually still in at 163. But you're in $23, $24 gain, still in, okay? You're still doing good. It's $2,400 per 100 shares, okay? You can go through all of them. Now, what I want to show you is what I do when I swing trade, okay? So I come over here and I get rid of the 18, okay? And I move it to a 5, okay? Now, this is like the golden method for swing trading, okay? You know the bull flag, or the impulse and kind of like an impulse, and then it comes down like a kind of a bull flag, and then it'll jump up. This will identify all of that. So what are we on right here? Apple. Okay, if you just do the 9 to 5, and you can choose the time frame. The daily is pretty good for this, actually. If you choose the 9 to 5, you're just waiting for the green one. I have them backwards. Here, I'll make your life a little easier. Sorry. Let's switch the colors so it doesn't confuse you. So let's move this one to the 5 and this one to the 9. Okay. Okay. If you wanted to swing trade Apple and you did this for the next 10 years doing exactly what I'm going to tell you right now, you will make a fortune. You could do it on Dutch Bros. You could do it on Chainlink. You could do it on Bitcoin. You could do it on anything. Oil, Forex, you could do it on anything, okay? This is like my little secret method. This is why I use my clouds. Let's say Apple is your gig, right? Boom. You buy it right there, 158.98. Why did you buy it there, Chris? Well, you bought it because the 9 went through the 5, okay? And when the 9 goes through the 5, it's hella bullish, okay? And you're basically only going to sell when it crosses, which is right there, okay? Now, this is a tighter method. This is a swing trader's method, okay? And this just, if you just do exactly what I say, you really will win a lot, okay? I've been doing this for a long time. I turned $375,000 into over $5 million. Took me years to do it, but basically this 9 to 5, and I'm basically a pivot-to-pivot directional swing trader is what I like to do, but during different markets and different market environments, I do different things, okay? But this method is the bomb, okay? So 172.98, okay, minus 159.34 is $13.97 a share. Okay, so you just made a whole bunch of money on that. Now, you can go short if you wanted, okay, on the 5 to 9. But even if you didn't want to go short, you don't like going short for, whatever reason, just come over here to the next time that it does it. And you basically sold at 169.82 minus 138.28. You made $31.54 a share. You could do this for the rest of your life, the 5 to 9 cross on the daily. It's sick. And you can do it with whatever you want. Hiking a sheet. You see basically how bullish it is, and then here's your impulse, and then boom, when it crosses, you skip all this damage, okay, and you just jump back in right here, boom, and then right as it starts going down, you get out. The 9 to 5 cross, and essentially the 9 to 5 cross is exactly what I have going on over here. My cloud, okay, let's just grab Tesla. Okay, and we are on the daily. Okay, so the cloud, okay, the top has a line and it's the 5 and the bottom is the 9, okay? And basically when they cross, this goes blue. And when they uncross, it goes purple. When they cross, it goes blue. They uncross, it goes purple. The 9 to 5 cross. I call it cloud trading, but basically it's the 9 to 5 cross. It is the swing trader dream. It's so good. So 9 to 5 crosses, it goes blue, and as soon as it goes purple, that means that it's crossing back through. So that's 2 really good tips. One for safety, how to accumulate, and on the 9 to 18 for safety. And then if you want to swing trade, that's another way. So the 9 to 18 for safety on the daily will really, really just show you like when to get in. And again, I know a lot of people are probably looking at Bitcoin right now. So, Bitcoin is still showing weakness on the daily. Okay, it's still, to me, showing like it's going to come down. However, if we look at different time frames, that's when we start trading and we start running the momentum up and down. There can be, on the hourly, it can cross really good and then cross back down. It can do that a whole bunch of times and not still show that you're in an uptrend on the daily. You're just trading the hourly at that point. So you have to choose your time frame. But if you're long-term and you have that DCA and you want to accumulate, just wait for the cross on the daily and you're in, baby. You're good to go. So, on the 4 hour, still not good. Even though price action's near the 9 is not crossed through the 18. Now on the 1 hour, it's going straight. We haven't confirmed, but we are right at the precipice. On the 30-minute, no, it's straight, but we're below it. Getting a lot of mixed signals, right? So on the 5-minute, it's a lot of mixed signals. So it looks like it's going to come down on the 5-minute, and on the 1 minute, it is coming down. So yeah, essentially just throw a 9 and an 18 on your chart. Stocks, commodities, Forex, crypto, doesn't matter. And if you want to know when to buy, then just buy when the 9 comes back up through the 18 and they cross, just like it crossed right here. And if you did that, you essentially, because it didn't make a black line, you essentially didn't get out until right here. So even though this wasn't like a huge move, it was $8,000 is what this move was. You would have caught the whole 8,000 and you would have got out, and then you would have that extra 8,000 profit with your principal, and then you just wait for this to do its thing, and when it crosses, you throw it all in, and now you're compounding. Who loves you, baby? Welcome to the wheelhouse.